Good afternoon. This is Ken Jolliffe with BIS Commodities here in Cedar Rapids, Iowa with your commodity market review for December 19th. Grain market this week, rather active in the wheat trade, pretty quiet in the corn trade, a little bit lower in the bean trade. Looking at the final numbers here, corn market was up 3 cents on the week. The bean market was down 16 3/4 cents, and the wheat market up 25 3/4 cents. Breaking it down, we'll start out with the wheat market being the most active. Although we were up approximately 25 cents on the week, we were about 45 cents off the weekly high, which was posted during the overnight trade Wednesday night, early Thursday morning. Most of the storyline for the week continues to be the drop in the Russian ruble as far as the currency trade, and what the Russian government and the state are doing, trying to curtail the possibility of exports, out of that country. They are trying to keep the Russian producer from using the export market for a tool right now. As the purpose for holding on to the wheat is the currency dropping, against the world other currencies. The other thing we got to remember about the wheat market, though, is even though we could see the curtailment of exports coming out of Russia, which, maybe it's 2 to 5 million metric tons, overall the world is still sitting on plenty of wheat. What we're really going to do, if this works out this way, is probably move some of the export business out of the Russian area, either into Ukraine, or yet we could see people like India come back into the export market, and that country's been 3.5 years out of the export business. So even see reports coming out of Argentina here in the last 24 hours that they are raising their estimate on their wheat crop, so you could see them entertain some extra export business, moving ahead there too. So the wheat market affected the corn trade this week, even though the corn trade closed up only 3 cents. We seem to be still holding in a trading range between roughly $4 on the bottom side, looking at the March futures, 4 1/4 on the top side. The strong cash movement we've seen here over the last 5 to 10 days has softened up the CIF basis, softened up the processor basis here across the central part of the plains. The export market, though rather quiet, we're still seeing routine business done with countries like Japan and Mexico, as we had sales announced here this morning, But the weekly sales were nothing aggressive, so we're probably still pretty well on target at the USDA's current 1.75 billion bushels. Wheat or soybean market for this week, other than the blip in the news headlines yesterday talking about the possible Argentine dock strike, which typically happens every year around the holidays like this. That headline rallied the beans yesterday. We were down some today, with the bean market down approximately 16 cents on the week. It gives the impression that maybe we have chased most of the shorts out of this bean market. When you look at the fundamental side of the news here right now, we continue to see very favorable weather down in South America. Some of those areas are looking for 1 to 2 inch rains to come through the bean growing acres here this weekend. Looking at some of the states breakdown down through there, this morning there was reports out like Rio Grande do Sul, looking at about a third of their crop already flowering, with a crop rating as high as 85% good to excellent. So that crop, as we come through the holidays and get into that January and late January time frame, at this particular time soil moisture is adequate in most areas. Maybe a little bit of dryness up in the northeast corner of the part of Brazil here right now. Argentina, much in the same shape down there, with good weather, good growing conditions. Looks like the possibility of an excellent bean crop coming out of there. Of course, that country always has a little issue as we get into their harvest, in particular with their meal side of things. With the currency trade, they're very similar to the currency type trade that we're seeing in Russia, where the producers like to hang on to the actual bushels, versus the deflationary currency issues there. So always kind of flares up some things there in the meal side of the trade, which may affect us, someplace down the road here, 60 to 90 days from now. But in general, the grain trade for the week, was basically pretty quiet, other than this wheat thing. I'm sure moving into next week, even though it'll be a shortened week because of the Christmas holidays, it'll be still dictated by the headline trade off the computers. We have the managed funds now long upwards of 240,000 contracts of corn. So it'll be very interesting how they maintain this length going into the end of the year. Livestock trade, again, very active, particularly in the feeder cattle pits this week, with the spending much of the first part of the week, with a limit down feeder cattle trade. The CME finally on Thursday expanded those limits to $4.50 per contract. That at least allowed us to begin to trade that at that particular time. What it did do is create quite a volatility within the trade. As yesterday we saw some of those contracts have a $9 trading range, and today we settled back up anywhere from 250 to 450 higher in some of those contracts. When you look at the feeder cattle for the week, we're down about 545, but you're about $8 off the lows here, using the settlements this afternoon. The live cattle for the week closed only down $1.30 after all the activity during the week with the feeder side of things, and the hog market was down about $1.50 for the week. So we did have a cattle on feed report, this afternoon. Looking at those numbers, on feed came out at 101 with an estimate of 101.3, so not a lot of difference there. The placements were at 96 versus an estimate of 96.6. And the marketing was low. It was low at 89 versus an estimate of 90.2. So probably doesn't have a lot of effect in the actual futures trade as going into Monday morning. It'll still be more about the overall extreme volatility of the in and out of the funds here for right now. So kind of summarizing things as we go into the holiday trade, we'll probably see a lot quieter trade next week. Problem with that is that any headline, pro or con, could spur some drastic movement of any of these contracts, any of these commodities we've been talking about here this afternoon. So be kind of aware of that. But overall, it was a quiet week, other than the feeder cattle and other than the wheat. So along with that, this will probably be the last video I'll be putting together this year. So wish everybody Merry Christmas, Happy New Year. See you in 2015. Thank you.